Hello and welcome to InvestorToday.ca. I'm your host, Dave Glover. InvestorToday.ca is brought to you in conjunction with RBL Communications, your online IR professionals. We're coming to you live from the Chicago Resource Expo in beautiful Rolling Meadows, Illinois. It is Friday the 27th of April, and I'm sitting with Mickey Fulp, the Mercenary Geologist. Mickey, always a pleasure to sit down with you. Every chance I get, I try to track Mickey down and see if we can't get a few minutes and pick your brain. I know today, for the viewers that are paying attention to what's been going on in the markets, particularly, especially when it comes to resources, things have really sort of gone downhill since last year, haven't they, Mickey?
Well, they very much have. If you look at the Toronto Venture Index, as you and I think, have spoken about before, it hit its 5-year high, 4-year high, right before PDAC in 2011. Right. It's basically been on the downslope since then. Mm-hmm. I just put out a piece last night specifically for this show called "Why Gold Stocks Suck." That's and right. Basically, I went in and looked at a number of reasons. But the bottom line is there's no liquidity in this market. Mm-hmm. There's no volume on the venture exchange, and we all know that when there's liquidity and volume, market capitalizations go up and vice versa, and there's just been no liquidity essentially for the last 12 months.
Well, and there have been just a lot of companies getting into the venture markets. I know in the last 5 years alone, we've seen the number of companies really increase. But can we talk about those companies? I mean, where are they? And you know, do we anticipate them being around even in 6 months?
Well, I hope not, but I think we're due for a washout in this business. I spent most of the last week researching this piece, and I think it's the first time in something on the order of 3 years where I went a week without doing an interview or publishing an article or a video or whatever. But I spent that time researching this particular subject, and there are 1,716 juniors with market caps less than $500 million in the natural resource business. About 80% of those are exposed to gold either as a primary or secondary commodity in at least one property, and about a little less than half of those have reported news on that gold property in the last year. So I can take those statistics and say, and we all know that this business is driven by gold. So if you look at the price of gold over the last 15 months, since January of 2011, it's up 18%. In that period of time, Venture Exchange Index is down something on the order almost 40%.
That's right.
So there's been this disconnect between the price of gold and the juniors, and I think that's because we have too many juniors. They were funded with projects or management or share structures which weren't particularly viable during the bull market, and now that's come to bear, and a lot of these companies are not successful. They've overpromised and underdelivered, and now investors are waking up to that fact. So it looks like to me we're going to have a bear market for quite some time.
Well, so as far as Mickey's concerned, things look pretty grim, I guess, for the juniors. But as you said, there's so many stories out there. There's so many companies that are doing exploration right now. And the real issue is whether or not you're going to be able to bring those projects to a mine, right? I mean, that's really what it comes down to. How much gold are you going to be able to get out of the ground? I understand that you've got, a resource of, X, Y, Z. But if you can't get it out of the ground and you can't get it to market, then that obviously is going to have a huge impact on whether or not your price is going to stabilize or go down.
Right. So the Mother Earth is very well endowed. Now, gold's a rare commodity, but it's very well endowed with local concentrations of gold. And we call those in the geology business anomalies, because they have a higher amount of gold than's normal in the crust, which is only 3 to 4 parts per billion. So because there's these very small but concentrated areas with gold, it's very easy for a company to pick up a gold project and drill a couple of holes and hit values of interest that will interest the stock market. And they may be 1 or 2 drill holes with economic values, but it takes a whole nother set of criteria to make a mine out of that. A mine, a mineral deposit, an ore deposit, is defined as a geochemical anomaly from which a mineral can be extracted at a profit. Well, very few of these companies have had, will have, or have any possibility of having a deposit that makes a mine. Maybe 1 or 2% of the juniors will ever make a mine. So what we're seeing is investors and even the major institutions that fund advanced projects are looking at this business and saying, we put all this money in, where's our reward? And there has been no reward for well over a year right now, and so they've lost interest, and volumes have gone down, and I don't see anything on the short-term horizon is going to solve that problem.
Right. Well, a lot of these companies are financing based on results of like 2 and 3 grams per ton gold over, say, 100 meters or something like that, which is considered to be a pretty reasonable return. But it's 2 and 3 grams. I mean, it may be economically viable with gold at $1,650 an ounce, but anything less than $1,100, and you're not even a viable operation any longer.
Well, your point's well taken, and 2 or 3 grams is going to make an open pit gold mine. No doubt about it. But what we're seeing really, if you look at the average company right now, they are going after less than 1 gram per ton.
Yes.
So you'll see drill hole results. You'll even see mines that are half a gram per ton that are breaking even, maybe making small profits at the present gold price. So it's really not the 2 to 3 grammers that I'm concerned about. It's all those less than a gram, because there's no room for error in those. And every geologist knows that grade is king. So I am out there looking for open pit gold deposits that run well over 1 gram per ton. If it's underground, I want to see at least 5 to 6 grams per ton.
Right.
And the majority of gold companies do not have those sorts of deposits, and they're going to fail.
Absolutely. Well, you know, we've spent a lot of time talking about gold because gold really is the hot commodity right now. But the newest commodity, and this is something we discussed at PDAC, was graphite and graphene and that type of mining and exploration. Do you see that market in the same sense, or are we in a different realm with those?
Well, I'm very bearish on gold stocks. I see no catalyst that can turn this sector around, at least until Labor Day, after the summer doldrums. That's not the case in some other commodities. I'm a natural optimist, so I always find something to be long on, and one of those things I'm long on right now is graphite. But I want to separate that from graphene, because graphene is a technology that will be developed commercially no sooner than 10 and likely more on the order of 15 years. So that's way far out to look at. The net present value of that idea is absolutely negative right now. It has no net present value. So what I'm looking at are viable graphite deposits and viable companies with it, once again, the right share structure, tight share structure, the right people that have developed mines before, have experience in graphite operations, and a high-grade graphite deposit. Anything, in my opinion, for the most part, less than 5%, you don't even want to look at. So we're again going to go after the higher-grade graphite deposits and put money into that. And I think this is, in my opinion, the next big thing. Even though the markets are junior market, in a word, sucks right now.
Absolutely.
But the market will always find a story, and because people are naturally optimists, you know, the people that survived from the caveman era, I would submit, were optimists. Those were the guys that went out, and it's survival of the fittest, and optimists have become the genetic choice in our species. So from that fact, the market will find something to be optimistic about, something to promote, and I think that's graphite the next.
So on the last word, are there any particular graphite companies that you're looking at or maybe that are on your sort of watch list, Mickey?
Well, I'm looking at what I call the top 3 companies, and that would be Focus Metals, Northern Graphite, and Flinders Resources. The only one of those that I'm really involved in is Flinders, but I think these 3 companies are, if you will, the cream of the crop, most advanced at this stage. Flinders Resource, a very interesting company. It's the same people that did Mawson Resources and had success there, and Tasman Metals. It is in central Sweden. It's a past-producing graphite mine. I am an early-on shareholder, participated in 2 private placements. They are sponsors of my website, so my opinions are strongly biased. I have skin in this game. But has a very robust graphite deposit that produced until 2001 for about $15 to $20 million, and in less than 2 years it'll be in production again.
Absolutely. Well, that's wonderful to hear, and it's, as always, a pleasure to sit with Mickey Fulp. I'm Dave Glover. This is InvestorToday.ca. We're coming to you live from the Chicago Resource Expo. Thanks again, Mickey, for taking time to be with us, and we look forward to sitting down with you again.
All right.
Thank
Always
you.
a pleasure.
Thanks
Dave.
again, Mickey.
All right. Thanks
for tuning in, viewers.